welcome back to the course on Forex trading. Today's going to be a very fun tutorial. We're going to talk about Forex charts. Very often when you hear about Forex charts, you hear the abbreviation OHLC. So what does it even stand for and what does it mean? OHLC stands for Open, High, Low, and Close. And to get to know this abbreviation a bit better, we're going to start by drawing two axes. The horizontal axis will be time and the vertical axis will be price. Now these four blue lines represent, each one of them represents the start of a new day on our timeline. So right now on our chart we have 3 days: day 1, day 2, and day 3. Now let's for a second forget about day 1 and day 3 and just focus on day 2. We're going to use this chart to represent how the price of a certain currency pair changed through time. So let's assume, for instance, that we're looking at the euro-US dollar currency pair. When day 2 started, this currency pair already had a price, a certain price. So at midnight of day 2, there was a certain price. Let's mark this price with a simple dash at the correct price level. Also, when the day finished, at midnight between day 2 and day 3, the euro-US dollar currency pair also had a price. Let's mark that as well. So the first dash, the one on the left, is called the open price because the day 2 opened with that price. And the second dash, the one on the right, is called the close price because day 2 closed with that price. And also throughout day 2, the price naturally moved up and down, and somewhere there was a minimum price of that day. So let's mark that minimum price with an X. On the other hand, there was also a maximum price throughout the day. Let's mark that one with an X as well. If we now connect the X's with a vertical bar and forget about the X's themselves, then we have now created a complete bar for the euro-US dollar currency pair for that day, for day 2. And as we saw through the creation process, any bar has 4 price points. The open price, which is the dash on the left, the low price, which is the bottom of the vertical bar, the high price, which is the top of the vertical bar, and the close price, which is the dash on the right. So to quickly sum up, every bar has an open, a low, a high, and a close price. And that's where the abbreviation OHLC comes from. Now if we put multiple of these bars together, then we will get a Forex bar chart. As you can see, the closing price of one day is actually the opening price of the next day. There are some exceptions to this rule, especially if you're looking at Friday and Monday, because something might have happened over the weekend and the opening price on Monday might be different to the closing price on Friday. But generally speaking, in most cases, bars flow on from each other. Now sometimes these bar charts can be colored into red and green rather than just black to help traders see right away which bars are going down and which bars are going up. Bars that are going down are called bearish bars and bars that are going up are called bullish bars. But we'll talk more about bears and bulls in one of the upcoming tutorials. Now this is a bar chart. In Forex there are actually 2 more other types of charts that are very popular with traders. So the next type of chart, and perhaps you've even heard about this one, but if you haven't, doesn't matter, is called a candle chart. And I'm just going to transition this bar chart into a candle chart and watch how this transition happens. In front of us we have the same chart, but now it looks different. Instead of vertical bars and horizontal dashes, we've got these rectangles with lines sticking out of them at the top, at the bottom, and some of the rectangles are hollow and some of them are filled. In essence, this chart carries the same information, it's just visually represented differently. First thing that we can notice is that because of these vertical lines, some of the rectangles actually do look like candles, and that's why it's called a candle chart. Now every one of these candles has 3 elements to it. It's got a body and it's got 2 shadows. Sometimes the shadows are also called tails. The shadows are very easy to understand because they're the same as what we had with a bar chart. The top of the top shadow represents the maximum price or the high price, and the bottom of the bottom shadow represents the minimum price or the low price. The body is a bit trickier than with the bar chart. The bottom of the body can represent either the open price or the close price. and the top of the body can represent either the close price or the open price as well. So how do you understand which one is which? Well, there's a general convention that hollow candles are bullish candles, meaning the ones going up, and filled candles are the ones that are going down, or bearish candles. And here hollow means the same color as the background. Filled means a different color. The way to remember this is that hollow are lighter than filled, because filled have more paint in them or color. They're heavier, so they're going down, and the hollow ones are lighter, so they're going up. That's the way I personally remember it. So knowing whether a candle is going up or down, it's very easy to understand where the open price is and where the close price is. This is because for a bullish candle, the bottom edge will always be the open price and the top edge will be the close price, whereas for a bearish candle, the top edge will be the open price and the bottom edge will be the close price. Also, candle charts can sometimes be colored, just as we saw with bar charts, and that helps traders see patterns quicker. In this case, red means bearish candles, green means bullish candles. And finally, this brings us to the last type of Forex chart, which is a line chart. A line chart basically simplifies this whole process by representing only one single price. It only represents the close price. So instead of looking at open, high, low, and close, the line chart will only look at the close price. So if we now take the close prices of every single day and we connect them, then we'll get a line chart. As you can see, it's much simpler. It carries less information, but sometimes it can be very convenient to make rough estimations and see overall patterns, and then further after this analysis go into more detail. Now let's have a look at a couple of real Forex charts. Here is the Euro-US dollar daily line chart. So as you can see, this is just what we talked about, only the close prices for every single day. At the bottom you can see the days, on the right you can see the prices, but most importantly we can see the line chart, which is showing us that currently the Euro-US dollar seems to be falling down. Now let's look at the same chart but represented by a bar chart. As you can see, now we have much more information. They might be a bit more cluttered, but we can see where the highs and lows were and exactly how this progression or this trend is developing. And now I'll change this bar chart into a candle chart, and you should decide for yourself which one you like more. So there's a candle chart. The filled bars are the bearish bars, the hollow bars are the bullish bars, and it's actually a matter of personal preference whether you like the bar charts or the candle charts more. Some people use candle charts, some people use bar charts. It all depends which one is visually more plausible to you. And finally, I wanted to show you the same bar chart but in a different color scheme, because we will be working with MetaTrader 4, and you'll notice that by default the color scheme is different. It is green on black. So I'm just going to transform this now, and as you can see here, this is the typical MetaTrader 4 bar chart. It's got a black background and it's got black and white bars. This might be a bit confusing at first because here the black bars are bullish and the white bars are bearish, as opposed to what we had on the previous slide. But the way to remember it is not black and white, but hollow and filled. In this case, the background of the chart is black, so hollow will be black, and therefore the bullish bars are black in this instance. And whereas white is the opposite of black, and therefore the bearish bars are white and they're filled with color in this case. And before we finish off this tutorial, I'd like to mention that Forex charts are available not only at the daily level, but at many different time frames. So you could have 1 minute charts, you can have 10-minute charts, you can have 15-minute charts, 30-minute charts, weekly charts, monthly charts, and you can actually have any kind of chart in between because there are special tools to create those charts for you. But we'll go into more detail on this in further tutorials, and you'll see how we naturally will work with 15-minute time frames and hourly time frames. All of the concepts stay the same. On that note, we'll wrap up today's tutorial. Thank you very much for your attention, and I look forward to seeing you next time. Until then, happy trading.